Joining me now, co-head of U.S. software equity research at Citi, Tyler Radke. Tyler, golly, Microsoft, they're spending the cash, but you know, so is Meta. Meta is getting punished for it. Microsoft's being rewarded for it. What's that all about?
Well, I think the main difference is Microsoft has a proven track record in spending Capex, right? They weren't trying to do the metaverse. They have great distribution models to sell these services to enterprise companies. So we view Capex as a signal of strength, as a signal of future AI demand. So we're thinking they might spend $70 billion next year on Capex, maybe 80 if things really take off. So
how are they going to buy back their stock if they do that?
They're still generating even more than that.
Hey, you know what? Let's pull the screen up. We had a screen up a moment ago while you were talking about, and it's just sort of amazing in my mind because, listen, we want these companies to invest this sort of money in Capex, but this is the concentration of S&P 500 Capex, and you can see just the top 10 companies, 29% of the S&P, Capex, 54% of R&D. Yeah. It's like, I love entrepreneurship. I love to see someone go in their garage and tinker with something and make the next whatever. But how can anyone compete with these large companies? I mean, it feels like they have a moat built around them, and then they get so big, the government gets upset, and realizing all these new rules, they put another moat around them. They're unbeatable when they make these investments, aren't they?
It is. I mean, it ultimately is an arms race, right?
Yeah.
And you're seeing massive Capex spends, not just from Microsoft, Amazon, Google also doing those things. But at the same time, these are providing a lot of opportunities for smaller players. You can go to Microsoft. It's so much easier to build your next startup on these sets of services because you don't have to go out and buy that hardware as that company. Right. You can focus on what you're really good at, which is building the software.
As long as it's not Microsoft's business.
That's
you
right.
You still have a buy-in at 40 was your target last time.
And it ticked up to 495 post the earnings last night.
So then you're gonna have to adjust to the target.
Yeah. Well, I think the main thing from last night is our numbers went up, but I think Microsoft rightfully tried to temper expectations. Sure. You don't want people getting too far ahead of themselves. So if I just look at consensus estimates roughly held flat for next year. But I think as you get into the next quarter, the next 90 days are an exciting time. People are going to be excited about the next positive estimate revision in the stock. So we like it. We think the stock should be up a little more than it is today, but something to look forward to.
What about ServiceNow? That was another favorite of yours.
That's right. Yeah, so similar to Microsoft, we think they're really well positioned on the Gen AI theme. They have their annual user conference and financial analyst day in Vegas coming up in about 10 days. We think we're going to hear more on the generative AI theme. Ultimately, we think that business can accelerate their growth this year. This is a business that's growing earnings and cash flow roughly 30 to 40% a year, really at the forefront of delivering Gen AI innovation across your back office, middle offices processes, which is really what customers are trying to solve for, that next leg of productivity and
it's interesting, we're talking about all the money that these companies are spending and investing rather, but I think what they all have in common too is fantastic management. No matter how much cash you have, you have to have the right person at the top. So I want to talk about three more speculative ideas. We've got less than a minute to go, but I love these stocks. I've made money on them. I've gotten scorched on them because they're very volatile. Mungo, you've got $500 target. HubSpot, 767, and Elastic, 155.
Yeah.
What is it about these names?
Yeah, I think they're in unique positions in markets that are transforming, but they're still very early in their share gains, right? So you could look back 20, 30 years ago, Microsoft, Oracle, Salesforce were very small companies. So we think these businesses can grow into something very large over time. They have very strong competitive positions, good management teams for the most part, and we're very confident that they can be very profitable down the road. They're all kind of in different industries, but we think these could be the next mega cap players in years to come.
So the caveat is that they're extraordinarily volatile, but if you're a long-term investor who wishes they owned Microsoft 10, 20, 30 years ago, keep that in mind as you hold these and ride the wave.
That's right.
All right, Tyler, great stuff, man.
Thank you.
You are definitely, in my mind, the best software analyst out there. Thank you.
Appreciate it.
Appreciate it.